What's up, everybody? It's Jonathan. You can see my little guys are getting excited for Thanksgiving. Don't be alarmed. This guy's not real. In today's video, we're going to be talking about managing an options trade. We're going to talk about one of our recent lockup trades that's moving all around, and I'm going to use that as an example on how we can manage our options using stock. In the comments below, I want to hear, is this something you've heard of before? Have you tried managing your options with stock? Did you realize that you can manage your options with stock? So many people, I teach this, and then they ask me, said, I've been trading for 5 years. How come I've never learned this? Because most people aren't teaching you this. It's options 101, and it's something you absolutely need to learn. So let's get going to the example. All right?
Okay, so I have you at DocuSign. DocuSign is a trade that we've been trading because they have their lockup coming up. An IPO lockup is 6 months after an IPO, there's restricted shares that were held back. After 6 months of the IPO, those restricted shares are able to trade, so it puts a ton of downward pressure on a given name. That's not why I'm making this video though. I'm going to use Docu as an example because the thing's flying all around. So before anybody says, hey, you're Monday morning quarterback, of course you can do this example after the stock moved. The intention of the video is for you to see how to manage your position. I just wanted to find a stock that was moving. That's why I'm using Docu. Okay? That's it. Here's the example. Let's say we bought puts. Okay? Yes, the stock went down. Let's say we bought puts on the 47 strike. Let's buy 10 puts. If you buy 10 puts on the 47 strike, that's going to allow you to get short 1,000 shares at 47. Why would you want to get short 1,000 shares at 47? Well, you get a lot of leverage to be able to do that. Stocks up here, you could probably buy those 47 puts for 50 cents for not a lot of money. If you bought 10 of them, let's say you did buy them for 50 cents, think like you're short 1,000 shares of Docu. When Docu sells off, buy 300 shares. Buy 300 shares. After you buy 300, you're long 600, short 1,000, long 600. Your net position at expiration is short 400. You still own the 10 puts. Don't touch your 10 puts. At expiration, as long as this is in the money, you're going to be short 1,000 shares, but now you're long 300, so you're long 600. Your position right now is long 10 puts and also long 600 shares of stock. But watch, when it rallies, hey, sell 300. Sell 300. Now what we're doing is we're financing the trade. We just made $1,200 taking 4 points out of Docu 300 times. And here it looks like we took 4 points again, 300 times. So $2,400 in profit. Now your position is, hey, you're just long 10 puts. No problem. If it rallies, there's nothing we can do. We are short stock at 47. If it goes to 50, 55, we are short stock at 47. We're going to choose not to exercise those, so no big deal. But now the stock starts going down again. Matt, buy 300. Now your position is long 10 puts, or short 1,000 shares at expiration of 47, you just bought 300 again. So now you're long 10 puts, but think of it like you're short 700 shares because you're long 300. If it keeps going lower, slowly buy your position. Eventually, when you buy 1,000, you are flat. You don't have any risk. You are long 10 puts or short 1,000 shares, and then you're long 1,000 shares. So at expiration, short 1,000 at 47, long 1,000 at a net price of 40, you are dead flat. We want to do this to manage your options position. There is not a stronger approach to position management that I wish everybody would just take the time and learn. I think Michael sums it up best. With unlimited buying power, I would just scalp gamma all freaking day. What's better at reducing cost basis? Scalping gamma is managing your underlying position using stock. Learn how to scalp gamma, learn how to manage your position with stock. You're going to notice a lot more consistency in your trading. You'll notice risk be taken down, but your upside profit potential is still the same or maybe even greater. Any questions, guys, leave them in the comment. Jonathan Rose, Active Day Trader.